simultaneously. So thank you for holding on as I set this up. I can only do it one at a time with this software. So there are a bit of seconds that you have to waste. We're starting the stream now on Facebook. Am I live? I have a backup generator pull, and I'm also in Jersey, so I'm good as well. Ladies and gentlemen, Amazon Prime Play. What happened in the past on Amazon Prime days? What could you do to take advantage of it? We're going to go through all that and more. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk about here today. I'm going to share with you algorithmic levels as well as every single Amazon Prime Day that has happened in the past and what you could have done to take advantage of that. And we're going to even mention something else special for you afterwards for those who wish to watch the video a little longer. But first, before we go on, you are already agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything shown on this video. If you disagree, exit. And if you do agree, just sit back and enjoy the show. You're already agreeing to those terms by watching this video. Okay, Amazon Prime Play. Everybody's hyped up about it. First Amazon Prime. One of the tweets that went viral back in 2015 was, wow, I can get grandma panties for 51% off. And I thought, what a rude son of a gun. Like, how do you know these grannies aren't going to, like, I don't know, better lingerie stores and then getting 71% off of, underwear? But with that being said, Amazon Prime has come a long way and everybody looks forward to it. I'll be honest, I went on it last year and I'm like looking at this like, wow, I don't need a single thing here. Then I think we found like children's toys or clothes and maybe I bought a couple things. I tried to give my son see my son outfoxed me because what happened was on the Amazon Prime Day, I bought 100 steel die-cast cars for like 25 bucks, 100 of them. So I'm thinking to myself like I could sit here and bribe my kid. I could sit here and bribe him and each bribe will cost like 40 cents. And 40 cents will bribe him that I have a new toy that he hasn't seen before. So I gave him the toy once. I hid the toys in my closet, and then he just came out. And I noticed that every one of the cars were downstairs. He found it and taken them all. So he definitely got the best of me. But let's go to the charts and show you. First, I'm going to show you what happens. Then I'm going to tell you about what you could do about it. So Amazon Prime, if you are unaware, started back in 2015. And the date here in 2015 was right over here, July 15th. So right over here on July 15th, I'm going to just zoom in. I'm going to just zoom in for you. And I use this chart so I could just go back and just make it as clear as possible. I'll move my mug over here. Don't need to see my mug on the bottom left. So I want to show you right over here was the day on Amazon Prime. The stock gap down, closed on an inside candle, and then for the next 3 days it rallied. And I think this is going to be a key to how I decipher this. And it rallied. It had a high of the day of $464.70. Ah, the good old days, right? And then it went as high as 493. So it literally popped about 5% better, 7, 8% in a few days. It rallied hard. It popped about 30 points, let's call it. Let's call it about 30 points. Just round it off. 7, whatever, 8%, whatever it is. Big move right over here after Amazon Prime. That was the first time Amazon ever did Amazon Prime to celebrate, I believe it was 20 years in business. So it was a 20th year anniversary thing, and then it just stuck around. So move fast forward to 2016. It happened on July 12th, 2016, and I am just taking you through the manual time travel here. And then at the end, I'll tell you what I would do in this situation. So right over here is July 12th. It put in like some really funky outside bar. So the first time it put in an inside candle or a doji, and it was a doji inside a candle, meaning on the Amazon Prime Day, it didn't break the prior day's high or low. Now we have an Amazon Prime Day right over here where you broke the high and low. So when that happened, the stock fell a bit before popping higher. Okay. Fast forward to 2017, I'm going to take you to July 10th. I'm going to take you to July 10th, 2017. That was the 2017 one. This one closed in a green bar. Look at that. 2 days later, it hit a high of $999.44. 2 days later, it hit $1,008. Now, why that is very important is because those $1,000 calls exploded. And if you actually swung it longer, it actually kept going up. But here's the interesting part. I promise this is the last time I'm taking you back. If you held it over here on their first Prime Day sale, you hit a home run because you were part of earnings where it gapped up to $580.57 from a high of 464. It closed at 461. You could have made a potential, maximum potential, about 120 bucks from the $400 range if you held it. Okay. 2016, again, just want to show you one more time, and then I promise I will not take you back again. I should have mentioned this before, but I'm going to show you exactly what I'm going to do here. Here is the one where you put in the red bar. Look, you fell, then you popped up, and you obviously went extremely higher here. You could just see. I mean, I don't even want to talk about the numbers. They're big. They're very big numbers, but Amazon rallied. Fast forward to 2017. Was July 10th, right over here. After it closed, 2 days later, you got a nice little move. And yeah, if you held it, one second. I have to sign up for a silly account already with this website. Okay. And if you held it right over here, as opposed to just, the 2 days later, if you held it for a few weeks, it rallied hard every time. Fast forward to July 18th. It started on July 16th and they extended it to July 18th. So I'm going to show you the one that happened in 2018 now. Check this out. Here's July 16 to 18. Went up a little right away. I mean, it closed at 1822 and 2 days later hit 1858. Okay, $36 move. Not as much as the others, but $36 move in Amazon is really good. Fell, popped higher, fell, and rallied. The end result always ends with a rally. Now we're moving into this year. And what is it this year? What is it for 2019? Somebody in chat give the date. But the point is, no matter what Amazon did, it was always ending up as a buying opportunity for me. So you had one of two choices. What I think you could do in a situation like this is just do a straight up call spread on the first day. Because if you, again, we don't have a lot of statistics. We only have every prime day in existence, which is four. We have four. Granted, you would love a sample size of 100, but you can't get a sample size of that with the Amazon Prime because it only existed in 2015. So when it comes to a situation like this, I like the call spread because if it shoots up, okay, you wouldn't make as much money as with the straight calls. But if you had a call spread where you buy a strike, I would go like 2 months out on a call spread. Really. You buy like whatever, something ridiculously out of the money. I would. Amazon's trading at $2,000 right now. 2000 closed at $2,001.07. I would even I mean, we're gonna go through the process right now. I'll log in my account and I'll tell you exactly the call spread that I'd about be looking to take. All right. All right, 15th and 16th. So, all right. So this year it's starting next Monday. Next Monday will be the time to make this decision, and I think I could go over this on Sunday night with you guys. I probably will mention it at least one more time, but I think it's good because I'm only giving it to you, 2 trading days early before it happens, because then we have the weekend and then it starts on Monday. So for me, I would definitely want to have the idea in place on Monday. And the thought process is this: if you buy the call spread out of the money, and I'll show you which one I'm going to do or planning on doing. If something changes, I'll update accordingly. If the stock moves sideways, you're not going to get crushed. If it starts pulling down, you're not going to get crushed. But as it starts going up again, I think excuse me, cover the short side of the call. I'll go over the entire trade. I know. Um, I'll explain why I would do it and the options that I would take. I think it's also going to be important because if you do that and it rips up, you're going to make money anyway. So what I would do is I would go out to September 20th. There's September 20th calls. And there's a $2,100 call. Now, don't get scared. It's a $2,000 stock. This $2,100 call, the mid range was $46.68. That's 4,600 per contract. That's way too much money for most people, right? Let me show you how I would do it and what it would actually cost you. And then what you do is I would go right over to the $2,200 calls, which are, believe it or not, $20.73 to buy the $2,200 calls in Amazon expiring in September. Now, what this is going to do is it's going to end up costing you $2,500 per call spread. The beautiful thing about this call spread is it's very unlikely to get destroyed early on. So let's say in the worst case example, you do this call spread, and again, the prices will change on this call spread as it goes on. I'm just quoting you where it is today. 2,500 maybe is a lot for some people, but I mean, it's Amazon. You're dealing with 100 shares of Amazon. So instead of, you know what 100 shares of Amazon is? It's $200,000. So instead of putting $200,000, you could do it with $2,500. And there's going to be people out there who will do closer calls and closer strikes. Like if you wanted to do like 2050 calls, for example, and buy the 2050 call and sell the 2100 call, it would cost you about 2 grand. Cost you about $20. And the beautiful thing about it is I think you aim to get rid of one side. Now, yes, that could actually make the price of what you're doing a lot more expensive. I mean, I don't hate to say it, but I mean, it's Amazon. I know this is not your weekly Amazon option expiration. It's not really that thing. But you could even go 1 month out and it would be, significantly cheaper. So even if you went to like August 2016, 2019, August 16, 2019, the August monthlies, you would end up paying for a 2050, $2,100 call spread. You'd be spending about 1,800 bucks or $18 per spread. And what it does is it allows you to not get totally demolished if for whatever reason this goes against you. I mean, you already know the maximum you could lose. Maximizing, I mean, if you were in 100 shares of Amazon and it went down 18 points, you'd be down that $1,800 not knowing what to do. Your maximum risk is actually built into the trade already. So that's the worst case scenario, unless you sit there and stubbornly hold it till expiration and for whatever reason it didn't work by then, you'd probably get stopped out. But what I would actually do is if Amazon went down, like let's say it's easy to say what you would do with Amazon if it went up, like you'd be up money. That's not what we're talking about here. We're talking about what if Amazon went down? And if Amazon went down, your short call would be making money while your long call would be losing money. And I know this might sound a little foreign, but I'm going to show you the easiest way to understand this option trade. Okay, buy. I'll use the September monthly example because Amazon has rallied hard in the past. All right. Me, I like the $2,100, $2,200 call spread. You're risking whatever, $26, let's call it, and you could make 100 gross, 100 off of it. And if you cover the short call, you your potential then becomes unlimited, obviously, but you're likely not going to make an infinite amount of money. So let's talk about that. So buy Amazon, 920, $2,100 call. Let me just emphasize 2019. Sell Amazon, 920, $2,200 call. Total paid, I'll just take the mid price of both. I'm just going to call it $26. It's a little less, but for the argument's sakes of where the midpoint is today, it's rounded off. Total paid $2,600. And this is the most you can lose. But because you're short a call, unless you hold it to the very end and the stock doesn't get here, you're not going to lose that much. However, you know that that is the most you could lose. And what happens is this. Now, if Amazon goes up, the way I see it is do whatever you want. I know people love to have targets and whatever. We're in one of the most geopolitically polarized environment that I have seen in years. We're on the brink of war with Iran. There's issues with Russia. There's issues with Europe. There's issues with Japan. There's issues with Korea. There's issues with Mexico. There's issues with the United States. There's issues with Canada. I mean, what do I mean by issues? I mean, the right headline from any one of those countries, which is at an elevated chance right now, can make the market shoot up or shoot down. That's what I mean by polarized environment. So the way I've been trading consistently in this environment is I just been putting my profits on as modest as I can, and on lockdown. Just like, all right, market's going to get better. I mean, I've been a trader for 20 years. Why isn't anybody telling you that the market generally statistically sucks during these times? I think we're going to get 2, 3 good weeks between now and August. That's what I think. And then I know for a fact I could give you the day in which it will slow down. I'll say that for another show. I could give you the day in which the market will slow down. You'd be like, damn, how did Mark know? Because I've seen it 19 times in a row already, and this is going to be my 20th. All right, so back to the point. If Amazon goes up, do whatever you want. Don't give me the BS targets that everyone puts on something. I know it's very nice to have a target and say, measured move is this, or it should go up to the next resistance level. Sure, I could do that all day too. But honestly, do whatever you want. That's up to you. I don't really care about helping you in that situation because I don't know the best answer. Hindsight will tell you the best answer. You're telling me if Amazon goes up like 35, 40 points, you're just going to sit there and hold it and say, screw it, I want to make the full 100? Like, is that you? Maybe that's you, and maybe that's the smartest move you could have ever done. So keep in mind, everybody has different risk parameters. I love when people talk about targets and stops because it's a blanket statement. That target and stop might not be good for you. How many people do you see taking stocks with like dollar risk to make $2, and you don't want to risk a dollar? You can't risk a dollar. How many people feel that way? Depending on what you're trading, right? But I don't want to lose a full point on a name. Maybe you don't either. Now the question is more interesting when you ask if Amazon goes down. Now that's where I come in and give the answers. You see, this I think is a more important question. Amazon goes down. You could A, chuck the whole idea. You always have the ability to do that. And that, of course, goes for if Amazon goes up, you could chuck the whole idea. B, what I'm looking to do is find a support area or 3 days of down move consecutively to cover my short call, which would be the $2,200 call. And again, I understand these options are expensive. I understand these options are expensive. It's Amazon. This is an Amazon Prime play. Whether you trade this or not, to me, is irrelevant. It's just an idea. I do not fall in love with these ideas. I don't look at a stock anymore and say, oh my God, I was buying that stock at $100 and now it's at $170 beyond me. I don't look at some of these names and say, oh, what if I just magically held the entire position while it did that? And some traders think like that. It is toxic. It is toxic. What I'm trying to do is use a statistical correlation, a minor sample size statistical correlation of what happened last time. And if you apply this, that you should come up money, or at least you would have come up money last 1, 2, 3, 4 times it happens. And this is the fifth time. That's all I am doing. Nothing else, nothing more. So what I would do is, did I say 2 days? I meant 3. If you get 3 down days in a row, your $2,100 call will be down a little bit more than your $2,200 call is up in value. At that point, I am going to cover the short call for a profit. So immediately I lock in a profit. Immediately it makes the average price of my $2,100 call better because I made money on small amount, albeit on a portion of the trade. And what I actually might do if I don't do that, depending on what the market does, again, don't pigeon yourself into a certain idea. I find it absolutely hilarious how people just say what they do and assume that everyone could do it. You have to give people options of what to do in a situation because there are different traders out there who do different things. You could chuck the whole idea, do step A, and then buy shorter term calls. This to me would be my steps. So first I would start with A and B. But if I did A, I would go to C. And then I would buy shorter term calls. Why? I was never planning on holding this thing till September anyway. I was just giving myself time value. I mean, some of you might be watching options saying that, well, then why not just go 3 weeks out and do this, that, this? If that's you, if you want to say that is the best idea, God bless you. Go ahead and do it. You think I'm sitting here calculating if I go 2 or 3 months out, what would be better? There are too many infinite variables, which I wouldn't know which one was better until it already happened. Yeah, if I could sit there and predict the scenario that you go down for 3 days and then explode up afterwards, if I could predict that, I would just take weekly calls on the third day, load the boat and be one of the richest people in America. Sure, yeah, I would. That's what I would do. I mean, give me a break. Give me a break. You don't know what's going to happen. This is just how I'm going to approach it. I don't claim to be, you know, the smartest person in the world on options, but I do know how to make millions of dollars trading them. This is how I would approach this situation. Just like this. Nothing else. Just like that. Just like that. That's how I would do it. That's how I would do it. So basically it's step A, and then if step A, do below, then you go to step C. So I do one of those two things. Okay. That is my answer if it goes down. Take a modest loss, chuck the whole idea, and then buy shorter term calls. And then just lower my risk massively because if I do step B, I'm still going to be holding, it could be a $35 option. I don't like those things. I'll be honest, I don't like $35 options. There are people in our room who trade those things very successfully. Maybe you do. Maybe you like that. That's cool. You have my respect. Maybe you want to throw, 50 to 100 grand at this idea. Lots of people throw different money at different things. I think when I buy something and I like it and I buy like 20 contracts of a low conviction idea, and then all of a sudden I see like 700 contracts go off, like, hmm. And then when the play works, somebody hit a home run. But for me, this is how I'm going to play Amazon Prime again. It's happening next Monday, so I would look to do this trade near the close on Monday. Not only that, this Sunday, we are going to do the first course of its kind that I don't show you a bunch of BS chart patterns. I don't tell you how easy it is to make money. I don't tell you all these things that are audio bait, clickbait, things like that. We are doing the first course of its kind, and I know I talk about it so much because I am so antsy to throw this thing and like host it for you guys, and it's just like I can't wait. And it's going to be this Sunday again at July 14th. There is a link within the description of this video. The course is going to explain to you who you are as a trader, teach you smart strategies that are psychologically sound, that won't cause toxicity. Find out what you're good at. You might find that there's strategies you're doing now that you're really good at, and all you have to do is cut out the garbage. How are you going to do that? I am going to give you that answer. I'm also going to give you the answer of how to approach a stock situation mentally as you're watching it. A lot of times I do it in chat for the Newsbeat Live members. I'm looking at my position, like when we bought what was it, Microsoft today. When I bought Microsoft, first trade today. Whatever, just using this as a stupid example. Whoops. Here we go. All right, so like on Microsoft today, why is my face? All right, here we go. Okay, beautiful. So right over here on Microsoft today, bought through, stock went up, popped up a little higher, popped up a little higher, took off 80% of my position, held 20%. Held it, held it, held it, held it, held it, took a break even on the remainder of the 20%, and then Microsoft rallied. And I see people in the room selling here above 139, and I'm like, wow, they just crushed it. That is awesome. For like a low conviction idea, that's crushing. Could make good money on a Microsoft doing that. And it was kind of funny because while I could only do what I do, and yes, I did well on the trade, and yes, I made money on the trade. And in hindsight, I could have left the stop where it was preset below 138.24 and it would have never stopped me out. But I saw the Qs doing this. And the name I chose happened to exude relative strength despite the market going down. That's the power of choosing the right name to trade. So even while the market was going against me, and yes, Microsoft is very heavily weighted in the Qs. It's the largest company on the planet in known human history. Largest publicly traded company ever. Well, Apple, I don't know if this one was higher than when Apple's trading higher. I don't know. Point is, this is something that would normally drop hard with the Qs. And this was the Qs over here, and it plummeted. I know plummeted is a strong word. When the Qs go down 80 cents like this, that's a plummet these days. And then it rallied back, right? I saw that happening, and I saw a chance to break even on my 20%, and I dumped the position. And some people still had the conviction to hold, and it rallied despite the market going down. That's choosing a name with relative strength. If I can get people involved in names like that, that make sense, that are thick, that you could have very tight stops, that aren't penny stocks and sub whatever, sub $10 names and like the thickest stocks out there, the largest market caps out there, if I could get people involved in that and make money, your ceiling is infinite. Your ceiling is infinite. And don't misconstrue what I mean by saying your ceiling is infinite. Doesn't mean if your ceiling is infinite that you want to make $10 million a year. Most traders would be thrilled making 3 to 6 grand a month, 3 to 10 grand. You pretty much cover, I would say, 95% of traders if they're making 3 to 10 grand. And then, there's a lot of people in the Newsbeat live room are trying to hit the 7 figure mark and they're in the mid sixes. And that person wouldn't be as common as somebody who just wants to make 5 grand a year, 5 grand a month, 60 a year. There are people who would just be thrilled with that right now. So when I say your ceiling is infinite, I mean you could potentially become that trader making 5 grand a month into a trader making about 20 a month doing stuff like this where you'll be comfortable. And if you keep growing, I mean, you could keep sizing up. There isn't an amount of Microsoft you can or cannot take. It's infinite. As far as as far as us mortals are concerned, Microsoft is infinite. There's as much, each of these 5 minute candles are hundreds and hundreds and hundreds of thousands of shares. So do the math. The point of why I'm bringing this up to you is this is the next thing and the last thing I wanted to talk about here before I wrap it up. There's one really key thing, and I'll show you the algo levels. I mean, the one key thing I wanted to talk to you about is responsibility. Now, I had somebody call me on the phone today, and this is very interesting. I'm not going to say the gentleman's name. And a lot of you have said this before in chat. How many of you have said this before in chat? Mark, I don't know how you do it. I want you to take a break, man. Just take a break, dude. Like you're in the room with us after you do the shows, you're doing this, you're doing that. Just take a break. Some of you talk to me that way. And then one person asks, well, why are you doing it exactly? And my answer was because there are traders who are still not consistent inside my room. And they responded, Mark, 100% of traders are not going to make money. You're very aware of that. I've heard you say it. And I answered exactly. So I stop and I ask, after this show ends and I'm going to be in the room going over strategies that work, I stop and I ask, what does your service do? outside of here, for you guys obviously on Facebook and YouTube, what does your service do for you out there when you're not making money? Did you just become another number in the register? Honestly, I mean, look, you're talking to somebody who's been doing this for 12 years as a broadcaster, 20 years as an active intraday trader, over 20 years. Time flies when you're having fun. What are you doing to ensure that you're not giving up on the people who haven't made the money in which they need to make for their goals, for their life, to take care of their loved ones, for everything? Like, what have you done for those people? And when you wonder why I don't take vacations, and the last vacation I took was after Friday's close, and I came back on Sunday, so you wouldn't know I was gone. I stop and I ask, what is your service doing for you when you're not succeeding? Are they sitting there just doing videos like this in which I'm trying to help you, but there's a marketing aspect to what I'm doing. That wasn't my initial goal. There used to be no links in my first whatever 100 or so videos. I don't know if somebody T3 added them afterwards. There's no problem with sharing with you who I am. I do want to help you. I do want you to come to our room. But my question for you is, if you are not where you need to be as a trader right now, what should the person you follow do for you? I still did not get to every single person on the phone. I knocked off like 5 people today on the phone. I say knocked off because it's a list. And I call and I call and I call and I talk to people all the time, and I still have a list. I still didn't get to everyone. I'm doing phone calls throughout the day. I'm spending time after hours, and I'm juggling, my 2 boys, my wife. I mean, they are the love of my life, those people. The love of my life. I love nothing more than spending time with them. Honestly, like if you ask me what is your favorite thing in the world to do, it's spend time with them. But 100% of people don't succeed. So maybe I should just say, screw it. Just go upstairs and just say, I'm going to just relax and lie down in bed. Like maybe I should do that. And I'm saying this sarcastically. I'm saying it sarcastically because I almost feel like everything out there takes zero accountability on anything. At the end of the day, I need to sleep well at night knowing that I will go above and out of my way to help you, to do everything I can to help you succeed. And yes, 100% of you won't make money and 100% of you won't fail. And I can't stand when people use those numbers because it's almost a cop out to accept failure. Oh, losing money's okay. 100% of people don't make money in trading. Like, is that going to be your motto? Is that going to be your motto? Most traders out there are 1 or 2 or 3 stone throws away from turning the corner and becoming consistently profitable. Most of you. A lot of times, one thing could be the difference between you making money consistently and you losing money consistently. I know that. I know how it works because I've dealt with tens and tens and tens and tens of thousands of you over my career. That's how I know. I didn't wake up one day, I didn't read a book, I didn't read it online. So the point I'm making is I believe, and probably everyone in the industry that I'm in would disagree with me in terms of the trading service industry. I believe there should be a form of accountability for us gurus out there to do everything we can to help you become successful. And even if it means reading these infinite number of scientific reports that I've been doing and reading up all these things online, because the difference is if I read a report, I can affect thousands and thousands of people. If you read a report, maybe you'll reach out a few people around you, but you don't have the platform that I do. Most likely you don't if you're watching, some do. So I'm trying to take advantage of this platform to send a good message to everyone. And if you think I do a lot for you guys on Facebook or YouTube, thank you. I do a lot more for the members of my room, and that's what I'm going to spend time with right now. Tomorrow's levels today, here you go. Just simply come, screenshot this, support, resistance, pause this video right here, and click it if you want them. I hope you guys enjoyed the Newsbeat show. Happy trading, make money. I will see you Newsbeat Live members within seconds after this show ends and tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful evening.